D-Wave, ticker qbts. The only quantum company with real revenue. $24.6 million in fiscal year 2025, up 179% year over year. 83% gross margin. Q1 2026 bookings up 1,945% year over year, and it trades down 21% year to date while the sector is up 40%. This is the deep dive on the most underestimated name in the basket. Why qbts is unique. Real revenue, real margins, real customers. $24.6 million in fiscal year 2025. 83% gross margin. Fortune 100 customer, Florida Atlantic University, Government Labs. Q1 2026 bookings up 1,945% year over year, adding gate model capability via the QCI acquisition. Why it's debated. Annealing is not universal quantum. You can't run Shor's algorithm. Quantum advantage on annealing is debated in academia. Revenue is lumpy from system sale timing. Q1 2026 revenue minus 81% year over year because the prior year had a large system sale and this one didn't. qbts plays a different game, the only one with a P&L that resembles a business. The Business 2 platforms. Platform 1 annealing. The Advantage 2 system 5,000 plus qubits specialized for optimization, available commercially today, ship systems plus cloud plus revenue from both. The mature revenue-producing platform. Platform 2, gate model, emerging. Acquired Quantum Circuits Incorporated. Targets universal gate model computing. General availability targeted for 2026. Lets qbts compete with IonQ and RIGET on fault tolerance. Hedges the annealing is dead bear thesis. Dual platform equals optionality. Annealing pays the bills, gate model is the moonshot. The annealing edge. 5,000 plus qubits, real workloads. What annealing solves. Combinatorial optimization, logistics scheduling, portfolio rebalancing, drug discovery candidate screening, manufacturing routing. Why customers buy it. It works today, not in 2028. Faster than classical on certain problem shapes. Available via cloud through D-Wave Leap. D-Wave is the only commercial annealing provider. Annealing isn't sexy, but it's the only quantum hardware doing paid commercial work today. The gate model pivot. QCI Quantum Circuits Incorporated was a U.S. gate model startup. qbts acquired it late 2025. Gate model general availability targeted for 2026. Lets qbts pitch universal computing alongside annealing. Hedges the annealing irrelevance thesis. Why it matters. Single bare thesis becomes much harder. The annealing-only counter loses force. Competes on multiple modalities. Existing customers can migrate workloads as needed. qbts goes from 1 bet, annealing, to 2 bets, annealing plus gate, both with revenue paths. Revenue and bookings. Fiscal year 2024, $8.8 million. Fiscal year 2025, $24.59 million, up 179% year over year. Q4 2025 revenue $2.75 million, bookings $13.4 million, up 471% sequential. Q1 2026 revenue $2.9 million, down 81% year over year because of no system sale. But Q1 2026 bookings $33.4 million, up 1,945% year over year. Pipeline accelerating. Bookings lead revenue. The Q1 minus 81% is system sale timing, not demand failure. The 83% gross margin, the hidden moat. What 83% means here. Each dollar of revenue contributes 83 cents, operating leverage on every bookings dollar. Software and cloud margins, not hardware margins. The quantum computing as a service structure is core, comparable to top quartile SAS. Why peers don't have this. IonQ revenue is growing but margin is lower. RIGET revenue is a system plus cloud mix with hardware drag. Quantum Computing Incorporated revenue is too small to draw margin from. Hardware-heavy peers carry significant cost of revenue. 83% gross margin is the most underappreciated metric in the quantum basket. Customers, enterprise plus government mix. Fortune 100 enterprise, $10 million Q1 2026 multi-year qbts agreement. University, Florida Atlantic University, $20 million system sale year to date 2026. Government, U.S. National Labs, Canadian Government, EU programs. Cloud customers via D-Wave Leap plus a WS bracket access. Logistics and manufacturing customers running recurring optimization workloads. 2 named Q1 2026 deals equal more than $30 million. Backlog is the real story. Balance sheet. Cash plus equivalents about $304 million as of March 2025, updated higher after recent raises. No major debt overhang. Q1 2026 loss narrower than expected. Multi-year runway. The dilution profile. Cumulative 5-year insider sells approximately $294 million. A TM activity moderate. Better position than RIGT on dilution. Q1 2026 showing a path to narrowing operating losses. Of the 4 pure plays, qbts has the clearest path to operating leverage inflection. Insider and institutional. Cumulative 5-year insider sells about $294 million. Pattern. Rallies trigger insider supply. CEO Alan Barrett's technically led. Q1 2026 earnings call had the line, 2026 is a defining year. Institutional and analyst. Wall Street consensus 13 buys, 2 holds. Average price target $35.77 to $36.83. Implied upside 54 to 80% versus May 15, $20.66. Highest implied upside of the pure plays. Analyst consensus most bullish on qbts. Insider supply consistent with the sector pattern. Valuation. Less extreme than peers, still rich. Market cap approximately $8.4 billion against $24.6 million in fiscal year 2025 revenue. Enterprise value to sales trailing 12 months approximately 304 times, 4 times cheaper than RIGT. Enterprise value to bookings trailing 12 months approximately 200 times. If bookings convert to revenue, the multiple compresses fast. Price to sales forward 2026 is still triple-digit. 304 times versus 1,277 for RIGT. qbts is the cheapest pure play on enterprise value to sales. Bull case versus bear case. Bull, real revenue plus 83% gross margin. Q1 2026 bookings up 1,945% year over year. Dual platform annealing plus gate model. Highest analyst upside in the basket. Cheapest enterprise value over sales among pure plays. Catalysts, booking to revenue convergence. Gate model general availability in 2026. Bear, annealing relevance debate persists. Q1 2026 revenue minus 81% year over year headline. Insider sells $294 million cumulative. QCI integration execution risk. Still pre-profit. Catalysts. Q2 2026 earnings, revenue recognition. Quantinuum IPO comp re-rate sector. Verdict and sizing. The watchlist case, only real revenue plus 83% gross margin, corrected tape regime, dual platform optionality, highest analyst upside in basket. Annealing irrelevance debate is the only bear arc. Sizing notes, speculative sleeve but the largest position of the 4 picks. Bookings plus margin equals clearer P and L path. Stagger entries through Q2 2026 earnings. Hold against gate model general availability in 2026. Cut if QCI integration slips. Research opinion only, not investment advice. Do your own work. Next, Video 6 Arcit Deep Dive, Cortical Flow.